All right, what's up, traders? What's up, tycoons? Going to go ahead and do a market open analysis real quick and just go over some of the things that we're looking at. We've got the NASDAQ futures right over here, and we've got the ES futures over here. We can see that ES at open is trying to push up towards that 78.6 level. We'll have to see if we can get there or not, and get above there. That's going to be basically 43.33. If we can reclaim and get above this area, you can see that there's a nice gap to fill, both on the ES futures as well as the NASDAQ futures. You can see here that right now the NASDAQ is lagging behind. So if the market was to go bullish today, there's a little bit more upside potential for that gap fill if we were to see that gap fill in the NASDAQ futures. But tech is showing a little bit more weakness right now, so we do need to be cautious. These gap fills, oftentimes, if you come up to the halfway mark of the gap and you don't fill the rest of the gap, oftentimes that can be a bearish signal. So pay close attention here. All right, if we aren't able to get above 43.29, let's just call it 43.30 on the ES futures. You can also see that that was prior support 2 times in the past. If that area acts as strong resistance, then most likely things are going to end up reversing, and we could see, the ES pull back down. And again, you can see NASDAQ here. Tech is a little bit more bearish. So just keep an eye on those two. We'll dive into some of our internal metrics real quick and go over those for you guys. So starting off here, we're going to look at the 4 pillars. We have XLK in the top right. We have top left, SMH in the top right. This is going to be tech and the semiconductors. Semiconductors are arguably the most important, aspect of the tech industry right now. Okay, especially with NVIDIA and the whole AI wave. Semiconductors are very important. Then you have XLI. This is your industrial sector, and the XHB, which is your home builder sector. Now, when looking at this chart, we've been mentioning that you really need to see confluence in these, right? And so tech and SMH and semis have been holding their support level and potentially building a nice cup and handle here, right? I mean, you can see the potential for a nice cup and handle, but really, if XLK breaks down below 162.69, and if SMH breaks down below 142.59, that's going to cause some pain in the market, especially if they flip those to resistance, start to trade to the downside. You can see what happened when XLI and XHB did that, right? When they broke through their support levels, rather than trying to build that cup and handle, when they broke through their support levels, the market has been pretty red, right? These are weekly time frames, and you can see, and just take a look at the ES. It's been, there's been some pain in the market here recently, and a lot of that has to do with 2 of the 4 pillars breaking down below key support. Okay, so you want to monitor and see if XLK and SMH break down below there. That's going to be a sign of future bearishness and weakness in the market. Now, being that 2 of them are holding up, we're going to see if XLI and XHB can get back above that prior support level and reclaim that. That's going to show some sign of strength in the market. If these 2 as well up top, XLK and SMH, are able to, continue holding their support and push higher. If we were to take a look at the skew real quick, the skew is a really nice way of basically just monitoring extreme levels in the market, right? And we can see kind of how these 2 tend to align with each other and match up, right? You can see as the skew goes up, the SPX, the stock market, is also going up. And oftentimes when it reaches these certain levels up here, okay, basically 146 all the way up to about 170.55, those are my key levels, right? And these are times to when you want to start being cautious in the market. Because there's many times in the past where we've kind of started to see the skew pull back, and oftentimes when you see the skew start dropping here, that's when you'll see some pain in the market here as well, And then we see a rebound in the skew, we see a rebound in the stocks, and then the skew goes back down again. The skew is making lower lows right here, and the SPX is also making lower lows. So you want to keep an eye on the skew. If you're bullish, you want to see this thing start to recover and go back up. And if you're bearish, you want to monitor the skew and see if it continues to make these lower lows and stays in a downtrend. That's something you're going to want to pay attention for. When we take a look at our seasonality projection, all right, and this is for the SPY right here. This is for your S&P 500. All right, the seasonality projection has us really just chopping around, dropping a little bit more into, the middle of October. and then finding a bottom and seeing a strong rally. Now, this isn't something to live or die by. This is just a seasonality projection indicator that I put on Thinkorswim. So we'll have to see how that works out. There's a nice gap up here on the SPY, okay, right in this range. And look at where the seasonality projection has us going, right? It has us filling that gap over here in November. So, that's something that I'm definitely monitoring right now at the moment. If we were to take a look at TLT and SPX, okay, and take a look, we've mentioned how right over here, you can see that these often act as TLT often acts as a leading indicator, is what I like to say, for the stock market, right? So at this point here, we had lower highs. Meanwhile, the stock market was making higher highs. All right. And that's, basically telling you that the SPX should pull back at this moment. And you can see that's exactly what we got. Same thing over here. We had this very strong uptrend. Meanwhile, we had a very strong downtrend in bonds. And that's an indicator that the SPX should pull back. And we did see that pullback. And most recently, we talked about how TLT was making these lower lows. Meanwhile, the SPX was making these higher lows, and how, basically that should lead to some downside in the stock market. And we've seen that again. So, TLT often can be a leading indicator, and it's definitely something I like to look at. The way I use it is to try and spot those divergences. Okay. That's basically the main way I use that. You can also do this with the NASDAQ by taking a look at the TIPS ETF. Okay, the treasury inflated bond, and you basically see the same exact thing, right? What we're seeing here, okay, is the TIPS is making lower highs, the NASDAQ is making higher highs, and then we should be getting a pullback because of this divergence. TIPS can be a leading indicator for the NASDAQ. Same thing over here, TIPS in a downtrend, NASDAQ in an uptrend, we should see a pullback. All right, and then we had TIPS in an uptrend here, and the NASDAQ actually in a downtrend. And we were looking, and I said that this was pretty suspicious, right? It was basically the opposite of what we saw in the TLT. But ultimately, we can see here that the TIPS ended up crashing through, as well as the NASDAQ. So both of these are in a little bit more confluence now, after they both dropped after their recent divergence. We'll take a look and take a look at some of the risk on, risk off perspectives of the market. So basically what we have is a Riskon ETF up here. All right. This consists of copper, high yield bonds, the Aussie dollar, semiconductors, and high beta. We can see that this has been going down. We can also see risk off things such as gold, treasuries, the yen, utilities, and staples. This has also been going down. So we've really been seeing a broad sell-off, right? We're seeing it in the risk on aspects. We're seeing it in more of the risk off aspects, right? Everybody knows bonds have been selling off. Gold's been selling off. Utilities and staples have been selling off very hard. And as a result, we're seeing just an overall drop in the SPX and the S&P 500. If you're going to look for a bullish turn in the market, you would like to see the risk on basically break out of this downtrend right here. Okay, so essentially you would look for a break of this downtrend. You can see risk off right now is leading a little bit more, right? If we were to zoom in on this, on these charts right here, just so you can see a little bit clearer. Okay, and zoom in on these for you guys. You can see risk off right here is starting to tick up. Meanwhile, the risk on is starting to tick down. And overall, the SPX right now is ticking down. These are weekly timeframes, of course. We're going to go ahead and look at some other metrics real quick and take a look at some of the defensive aspects of the market. So we have our SPX right here. And then this is your high beta versus low volatility stocks. All right, so when this is going up, this means that high beta stocks are outperforming. This lets you know that the market is more offensive. And you can see that this has been in a downtrend, and basically letting you know that low volatility stocks are outperforming high beta stocks. All right, over here we have XLY to XLP. This is a little bit more risk on, right? And a little bit more offensive. We're still seeing consumer discretionary outperforming consumer staples. And this has a lot to do with staples and utilities just being in a complete bloodbath, not so much that consumer discretionary has just been, straight bullish. It's rather staples and utilities have been selling off harder. This right here is to take a look at basically a form of credit spreads, and we're seeing this drop as well. Whenever you spot a divergence in between these and the SPX, that lets you know that maybe whatever's happening in the SPX isn't justified. So we can see we've had the sell-off here. We're seeing, credit spreads right here. And these are in confluence. So again, if you want to see things go bullish, you're going to want to start to see these credit spreads go up. And you're going to want to start to see the high beta stocks outperforming the low volatility stocks. And then down here we have the XBI. This is your biotech sector. And we were looking for biotech to really break out and give us an idea that the market is a little bit more risk on, but we haven't quite got that yet. Biotech is arguably one of the most risk on asset classes. The reason being is that oftentimes you're investing in profitless companies, and looking for them to have some type of successful patent or get some FDA approval, at which point then they would be able to sell their product for a profit. All right. Let's see what else we can take a look at here. If we take a look at Bitcoin relative to, the markets and what it's doing, Bitcoin, you can see, is actually holding up pretty well here, right? It had its really big sell-off, but more recently, it's been holding up pretty nicely, relative to the S&P and relative to the NASDAQ. You can see it's actually been in a little bit more of an uptrend since this time period here, right? If we were just to go to the middle of September on all of these, right, and take a look at the performance during that. All right, we'll do the same thing right here with the S&P 500. Okay, and what we're seeing is that, the S&P and the NASDAQ have been dropping here, but meanwhile, in this time period, the NASDAQ, or I'm sorry, Bitcoin has been performing pretty well, and actually in a little bit more of an uptrend. There's a lot of catalysts behind crypto right now. You have the spot ETFs, you have the SEC battle with XRP, seeming to find some victories there with Ripple. Okay, lots of news about CBDCs. The Fed has their Fed Now payment system going, which is basically crypto related as well, if you're not familiar with that. So it's a little bit strange that we're actually seeing Bitcoin performing a little bit better than the S&P and then the NASDAQ right now. So that's something you may want to continue to monitor. If we take a look at natural gas, natural gas is finally above that $3 threshold. And this is resulting in BOIL, which is your leveraged ETF. BOIL has been absolutely skyrocketing. Okay, we can see from its lows up to its recent highs, it ran up basically 50%, all right, roughly 45%. And cold, which is going to be your bearish leveraged ETF, saw a very significant drop, right, from the highs of 67 down to lows of 43. And it makes a lot of sense for us to start to get a little bit of a pullback here in natural gas, but we want to see overall if the natural gas futures can maintain that $3 price level. That's going to be a very big level where a lot of investors got involved once we reached that $3 threshold. And if we can maintain that $3 threshold, that's going to be good, and that's going to cause a lot of, in my opinion, bullish activity in basically the natural gas environment. All right. If we take a look at some of our market internals here at the open, we're looking at the VOLD, the AD, and the tick. Okay, tick is it started off really bearish. We saw a nice uptick. It's basically neutral right now. We're seeing kind of the same thing in the VOLD. VOLD is just hanging around that zero line here. And the AD, the advanced decline line, you can see we opened up bearish. It's trying to push up. We'll have to see, how this is going to progress, right? If you're looking to be bullish on the day, you're going to want to see the VOLD tick up, okay? And you're going to want to see the advanced decline line get above zero and also tick up, all right? If this stays below zero and trades sideways or goes down, as well as the VOLD, right? If this really just trades sideways or goes down, it's going to be really hard for the bulls to have a good thesis and a good reason to buy. So, pay attention to your market internals today. And just monitor those. You remember, you're basically going to want to see all of these above zero for bullish readings for any intraday day trading. If we take a look back at the futures, we did come up here to that 78.6 level, 43.33, but you can see we're finding rejection. We're finding lots of resistance there. So you'll have to monitor that. If it can get above there, then, that's when we might start to see an uptick in the AD and the VOLD and the tick and, some of our market internals. So just a quick market open analysis. Hopefully you guys enjoyed this. If you do, let me know if you want to see more of these type videos in the future. I can do some more of these, maybe even pre-market, maybe market open, just depend on what time I get back from dropping the kids off at school. Smash the like button, subscribe to the channel for more, and I'm out.